right, folks, let me turn off the echo. There we go. Wow, there's lots of ambient noise. I apologize, and I'm sure the cat will say, yeah, no. um, all right, this is Red Ben. You can get a hold of me on Twitter at RedBenTrader. If you want to learn more about the algo, you got to talk to my coach. He runs a trading room. His name is Simon. You can get a hold of Simon at trade, the letter N, word perform at gmail.com. You can ask him for a 5-day free pass to the room. Every month we accept, like, I think he's okay with like 2 new members a month or something, but you can always get on a waiting list if there's not availability. But I'm not able to share the chart book with anyone. Unless you're in the room, you won't have access to the custom studies that he produced. But it is on Sierra Charts, so if you do join the room and you want to be able to use the algo, you will also need to have Sierra Charts on your desktop. So I'm hoping I'm not going to make this as long as usual. I really wanted to kind of... I've been looking at a lot of new ideas recently, primarily with the intention of, number one, solving the problem of what to do when we're in a clear uptrend or downtrend day. And the high odds trade and perform setups that we rely on for our regular everyday trading are not necessarily setting up appropriately because we don't get the pullbacks necessary and we don't want to fight the trend. So we end up like you could potentially wait a long time to get the high odds entry, which is fine. But the ideal situation, in my opinion, is if you can identify that you know which direction the trend is going, if you can determine whether or not that momentum has like legs, like if it has some ability to continue, it would... I felt it would be nice to, even if I couldn't achieve the 65 to 75% win rate that the trade and perform setups that we use in the room typically get, even if I wasn't able to get that win rate, if I could join a trend that had the potential to produce trades that were paying 2-to-1, 3-to-1, 5-to-1 reward to risk, it in certain conditions it would be worthwhile to try them. The mistakes that I have been finding I'm making as I try to like develop this part of my system is I'm overusing the momentum trades. I'm anticipating that momentum will enter the price action when there's not actually any evidence that there is any momentum. So the and the great thing is that the solution to that is actually to stick with the trade and perform entries that we always use, the mean reversion entries, the reversals that we tend to use that have a high win rate. Those will set up when you don't have momentum, when the market is balanced or when momentum is slowing and the market is preparing to turn. That's when those setups actually work the best. So the solution that I'm finding that I basically needed to like suss out is, how do I know when to stay on process and only look for those high odds trades, and what are the signals that I should be watching for that those very high odds reliable trades may not set up, and therefore I need to either not trade because I'll potentially like get frustrated or like try to fight the trend, or use a different strategy that may not have as good of a win rate, but like I said, if it's got the potential to make a really good risk reward, you don't necessarily need the 65, 70, 75% win rate. You can, if you can get 2-to-1, 3-to-1, 5-to-1, whatever on like even some of your trades, you can overcome, let's say, like a 50% win rate. So I've been working hard on, first of all, when there is momentum, like what setups actually work the best, and then B, when should I stop doing that? If there has been clear momentum and they have been working, when is that edge going to get too thin to even really try? And then C, how can I tell that there's momentum and that I should be trading with that strategy rather than the mean reversion strategy that I've been using for the last 3 years. So this is definitely more advanced, and it's primarily that this is going to be primarily the audience that I'm really looking for here is actually like members in the room who are already like profitable using the trade and perform system, but maybe are like in that same condition or situation that I have been in, where we get trend days and I know what I'm looking for, but it just doesn't happen, and it's frustrating. So and like I've said before, whenever I'm adding new things or exploring new ideas, I don't have any interest in replacing what I've already learned, because that works just fine how it is. And new members to the room should really focus on those high odds entries, because you need to build confidence in those to make money on a regular basis, has been my experience. Obviously, past performance is not an indicative of future results. I can't make any promises, right? But my experience has been, if I'm just patient for those entries, I will make money more than I lose money. But once you've done this for a while, yeah, you see that like, wow, if I just had a way to know that I could join the trend here, I could have just held runners practically all day, right? Now, today was not one of those days. Here, I'll show you. So I primarily trade NQ. These setups I'm going to talk about most likely will work on ES. They may also work on CL. I have not really needed to veer away from NQ for a while. Last August, I did need to go to CL. Was it last August or 2 Augusts ago? I don't know. I think it was last summer. Things just got so slow and it wasn't really rotating. So I ended up going to CL looking for trades, and that worked great. At the time, it might have been 2 years ago. I think it was 2021. But this year, NQ has been rotating, actually trading great for an August. So I don't know what that means. The like autumn is going to bring us, but what I want to point out though is this is the 2 hour chart, and all I really have here is the candles and then my voodoo range levels, which are just basically levels to watch, because I expect like that's kind of where like a natural rotation should be expected, a natural reaction could be expected. It doesn't mean that like the market has to stop at those levels. It's just when it does rotate like this or like this, like that, it's expected. It makes sense that that's just like a natural distance that I would expect based on like previous price action, that's where I expect those mean reversion trades to work the best, is after a reaction at those levels. So you can see though that you can't just like sell them expecting that, right? You have to actually see the price action tell you that it's confirmed, and then look for the execution signals. But what I want to point out here, oh, and then I also have a fixed range volume profile that starts way back here, because we were in this range back in June, and then we left or tried to leave, made a lower high with poor volume, and then fell back into this range. And I've talked extensively about how important it is to be aware of where fair value is, based not necessarily, Simon kind of tries to simplify things and shows that if you use the previous days or the previous session, like the Globex session, fair value, you can identify where you might have more trouble having trades like pay out. But while that is definitely true most of the time, I actually find it more useful to look back at when we traded in this area before and figure out like the composite value area, because when we leave that area on the higher time frame, the potential for either a reversal like this, where they try to come out and then they reject and go all the way to the other side, which can take days on this time frame, but that is fractal. That concept works on every time frame. So it might work the best when you've returned to a range that we've traded in days or weeks ago, but it also works if you return to a range that you traded in last week, for instance. So yeah, I'm going to get rid of this and just show you, for instance, if we were coming in yesterday, we're going to start at Monday, because I'm not going to go like trade by trade like I usually do at the end of the day. I want to like seek out these opportunities. So this is the fixed range volume profile tool. And if I was coming in on Monday, which started here, I might look back and say, well, starting here last Tuesday, we fell out of this range, right? So let's mark off where the fair value area of that upper range is before we fell out of it, came back, retested, and rejected. I'd say that breakdown occurred. You can look at volume for this, like whoever, this is very close, but most likely I'm gonna guess that it's probably about here, but you could probably take it to here too if you said this wasn't a significant enough breakdown. The exact point is not going to make that much of a difference, but let's do this is where the retest was, and that's right back in here. That's what got all the volume. So most likely that means, and this one was low, so actually that whole thing may actually be useful. So sorry about the jets. I'm in Vegas, and they occasionally at this time like to fly over my house, and they're noisy. You get used to it, but I forget that no one else is used to it. So yeah, we're not under attack or anything. It's thankfully they're just doing drills. I'm glad someone's flying them and not me. So this is going to be the area that's hardest to trade in, but if we stay in the area. But once we leave the area, that edge here is going to be a good location to look for rejections, and the point of control, the red, is going to be a good area or level to look for rejections. And you can see that both of them actually like worked, quote unquote, here. Like it would have been a good location. Oftentimes, if it's a very long consolidation, the value area will actually align with Buddha range levels. But right away, I could see like, okay, if it's Monday, if we are here, and I'm preparing for Monday's trading session, I would say I would be very happy to do business in this zone if I'm looking for rejection. And if we get over that, I could look for a pullback to buy and then try to get back up to this level. So then since we did reject it and went lower, I could also do the same thing on the lower value area. So this is like another consolidation zone. It included this retest, so they're going to overlap a bit, but I usually start where it retraces. So we're going to say this is the retracement. Now, if this was a lot lower volume than this one, it's very close. But if it was a lot lower, I would say it's a divergent low, and then I would actually start here. But we'll just, I don't want to make it complicated, so let's just do it like this, and that's the open, right? Yeah, so you wouldn't have that information on Monday, anything more than that. But we already get two likely trade locations. Is basically if I can get a long out of here, I'll just extend that. I thought there was, settings, style, extend right. It already is. Okay. And then, and then on top, you can see there's this value area high. And so that may act as resistance if I expect this range to continue lower. So we can probably take like that whole thing here and then line it up to value area high of that consolidation. So those would be my ideal trade locations. The harder trades are going to be in the middle, and then I can mark the VPOC. And since we're still inside the range, at least for now, that level is going to be the hardest place to get in and actually survive, because most of the trades that trigger there are going to get swept. You're going to get, there's basically, whenever there's a lot of volume at a price, right? It's just volume by price. VPOC is just where most of the volume, the price with the most volume, the most contracts traded over that range. Since there's so many contracts that have been traded at that price, no one's going to defend it. It's going to easily sweep through that price. So it's by far the worst place to enter a trade. But as we see here, if you leave the area and then return to it, and we like find resistance at that, see that? Find resistance at that VPOC, you can actually get some really like big momentum turns, because again, you don't expect them to defend it if you're going to stay in this area. So when they do, it's like, okay, we must not be in fair value anymore. We're obviously going lower. And usually when this occurs, you're going to fall through that value area low. Now, again, this does not just apply to the daily chart. As you can see, it's anywhere where price stayed the same for a period of time. You can also zoom in and do this on the hourly if you want, or the 2-minute, whatever. It'll still more or less apply. So on Monday, the hardest place to take a trade in NQ would have been right around 15,100. That would be the place where, even if the algo signaled that I should get long or short, the likelihood of that working for like a larger swing is going to be lower. Whereas if I can get away from that and preferably get up to this unfair pricing, I can probably get a short back to it and I can target that VPOC. Or technically, if I got down here, I could get a buy that would likely return to that VPOC as well. Now, the problem is with the long idea is this VPOC, it's basically a double distribution here. So while this is the VPOC, the voodoo range level at 15,205.25, it's almost like a second VPOC. So you can see here it acted as resistance, but that is also probably going to be a very choppy spot to enter trades, and we might expect some sweeps over that area because it's practically the VPOC. It's just not technically the VPOC, but it's got a lot of volume at that level, and then a big low volume node here that is going to be the more likely spot to act as support resistance. So when I want to know which voodoo range levels do I actually want to look for reactions to, well, this one in the low volume node, if I can point to it, that one is probably the most likely to give me scalp entries back to the edges. But again, this VPOC being here could cause some trouble. So instead, the ones outside in unfair pricing down here is going to be a great spot to look for reactions and execution signals. And this one, 15,266, 50.75, that one also would be a good trade location. Now, I need more than trade location to take a trade because I'm trading leveraged futures. If I was just trading like QQQ shares or something, like I might just wait for a reaction like this and see a close below and go ahead and put my stop up there and even, be okay with like a 60-point stop. But you can't do that with NQ. That would be a really big risk. So you need order flow to confirm that you're actually getting a reaction. But I just want to show you that with trade location alone, that the trades that set up in this unfair pricing are likely to sweep through the value area. So you can see if you've got the long here, now honestly, I may not have taken this because of the VPOC, but when you see it sweep through the VPOC and then come back and hold it, well, now this makes sense to actually, that's the only time when I might enter a trade in the middle, is when I see that it started in unfair pricing, it came back and it's treating the VPOC like support. Now, sometimes it's going to come and sweep one more time, so that it is a little risky. But once I've cleared this VR level here, I'd love to get a pullback. And so like this level at like noon Eastern would probably be a good spot to look for trades, or else even this one. And then you'd scalp it back to the unfair pricing. And if we get back into this range, again, this is your natural target. Otherwise, if you get through that, that's your natural target. So in this case, it lifts right basically to the range level that was aligned with this low volume node and the value area low of that consolidation period. It reverses almost to the tick and comes back through unfair pricing. So this reaction, this retest that rejects and turns into a doji, that is, if you didn't catch the short here, I can technically take pullback entry here if I get the reversal signal there. That's still okay because look at all this distance I have to come back to the VPOC. So trade location is still okay. But note here, if you did that, you can't put your stop inside of fair pricing. You have to be prepared for this area to get swept through, and your stop really belongs up here. And with NQ, that's too big. So while you could take a short here, you'd have to be very vigilant with exiting as it ripped back up, because if it's not going to continue down right away, it's going to take your stop almost every time. I want to show you that specific location on the algo and show you how if you're trading a momentum style, you'll get signaled in here. And in my opinion, it's okay to take the trade because you never know which ones are going to work and which ones aren't. But we know the locations to watch for what happens when it doesn't have momentum, when it's not trending. And that's basically exactly where it reverses. And so while I could have taken a loss there, I'm not going to take a full R there because it's not continuing to show momentum. So it comes back up to unfair pricing and rejects. This would be a better spot to enter a short. And then your target would be VPOC. It just misses it by like a couple ticks. So that happens. It comes back up and then finally rejects. You can see you could technically take a trade there, but just like this one, it's lower odds because you're inside of this value area, this fair pricing where you expect these sweeps. So you can do it, but the win rate's not going to be as high. Then you do get to the target, the VPOC, and then if runners go further, great. And that's where we are now. So I think the most important thing to see is if you want to have the highest win rate possible, the highest how can I say this? The way to improve your win rate the best, if you want to be the most conservative, you just ignore fair pricing. You ignore all of the algo signals that happen in here, and you wait basically for a signal up here or a signal down here. And if you don't get it, you just don't get it, right? And like I said, if you've got the VPOC in your way, we can make it red. If that's in your way, you might actually miss. You would have to take some profits here, and you might not get the long because of the location. And then again, since this one can be considered basically the same thing as a VPOC, you're going to get these sweeps here. So one way or another, the important thing to see right away is Monday and Tuesday, like this week, that if you want to look at what we knew before it started and say, what are my chances that I'm going to have a big trend day today? What's the likelihood that a momentum strategy is actually going to work considering the conditions? The answer on Monday and today it's low. The chances for a big trend day were low. Now, if you are okay trading the sweep across this range, and which I am, because that's a 160 point sweep, if you catch the whole thing, well, then momentum trades are going to work fine as long as you have the right trade location. But if your idea of a trend day is, multiple days range, like through like extending out of consolidation, like going lower here, like let me find a good example, like this, right? Multiple days range getting extended. That's where the momentum strategies really shine. That's where you're going to get your 5-to-1, 6-to-1, 10-to-1 trades. This, where like, and that's also the spot where the reversal trades that normally in a balance environment, they just don't work anymore in this situation. They'll set up sometimes, but they won't work because there's too many trap traders on the other side. So they'll attempt to reverse it and then just continue. So if you want to catch, if this is what you want to trade, you can't use the reversal strategies, which kind of seems obvious, but to be honest, it was a revelation for me to realize that if I'm going to get frustrated about not getting a high odds reversal setup on a huge trend day like this, like there's really no reason to be frustrated about it, because of course they're not going to work when it's doing that. You just need a different strategy. You need to find a pullback entry and join the trend, not reverse it. Whereas if you're trading in balance like this, what the market usually does, the reversals at location are going to work over and over again. And when you add them up, you're going to make the same as if you got down here and just rode it all the way up, right? This might seem easier, but to be honest, it's not. It's really hard to hold through these consolidations, really hard, for me anyway. So that is the first thing to realize, is that you need to look at your what's the word, like your expectancy, right, before you consider whether or not you want to use a momentum strategy or if you want to use a reversal strategy. And then only after that, realizing what your expectancy is, you need to consider where your trade location is. And it's rare that the trade entries can go in both directions and get continuation like this one day after the next. So this Monday going like straight up, and then Tuesday basically, I mean, you had this little like sweep here, but other than that, it's been like more or less straight down. This is actually the anomaly. And what's really happening is on a higher time frame, this is just range expansion. It's balance, but in a wider range that we're used to. So if you use the reversal strategies that Simon teaches and you wait for the trade location that you want, it's going to work fine. You don't really need a momentum strategy to catch that, because your best setup is going to be here, here, and here, and here. All those locations are going to be the ones that you want to look for a reversal in. The pullback entries, which is what momentum traders tend to do, and the breakout entries, like buying here, they're actually going to be really tough, because the breakouts are going to take you into resistance, or here, if you break down, it's going to take you into support, because you're trading in the opposite direction in unfair pricing. So it's confusing, because at first you could look at if you just looked at like the 30-minute chart, or even like smaller, let's say you're day trading and you're like, how did today go? Your first thought of the day is like, well, we open, the opening range was broken, we pulled back, and then like drove lower. So it could be a trend day, and that's true. But the problem is that this area is, am I in the right day? Yeah, this area here is that VPOC that tends to create a lot of turns. So you get this, it's a much bigger retracement. It's like a 50% retracement, if I had to guess. Yeah, 61.8% retracement, which is really not supposed to happen in a trend day. And so when you get this retrace, you need to recognize that, like, okay, we're not trending down. This isn't a typical trend down day. It's not going to look like this over and over again. And therefore, if you try after that retracement, if you try to take breakdowns, you're going to get hosed. And then it's going to go your direction, and then you're going to take the breakdown, and then you're going to get hosed, and then it's going to go your direction, and you're going to have a 30% win rate. And your payout is not going to be the 150 point range unless you got the entry in unfair pricing, which again, that's a reversal trade. It's not a momentum trade. So like I said, maybe it's confusing to other people. It's confusing to me. But it's that recognition that it's not just the direction that the market's going and how far it's going that really tell you which strategy to use. You have to look at the bigger picture and ask, where's your expectancy and where is the best place to trade? And if you can see that the best places to trade are on the edges, if like you can use the technique I just showed you or whatever technique you want, and there is a clear spot where it's like, hey, if they reverse here, it's probably a short, but if they reverse here, it's probably a long. Your momentum breakouts and your pullback entries and all that stuff, they're gonna suck most of the time. But the reversals entries at location like this are gonna be awesome. You just need to be patient because that reversal will only work down here or up here. It's like this one worked, it got in there. This one, you'd be lucky to catch that. Now, the interesting thing is if you're zoomed in enough, and I'll show this on the Renko chart in a minute, but if you're zoomed in enough, I actually caught a short at the end of the day using the momentum strategy because, so where's 16? So that's the close. So on the higher time frame, right, we saw that we were in consolidation on a much higher time frame, and we got this retrace, and it set up for me on a pullback into a trade location based on order flow that gave me nope, not 16. It must have been, hold on, where was it? It was this one. It's this drop. I'm so zoomed in, I didn't even see it. So this breakdown is the one I caught. And if you zoom in enough, it looks like a trend day, right? But if you time that wrong and you try to sell this, you get stopped out and then they go. So you need either a persistence where you're so confident that it's eventually going to break lower that you keep hitting it. And that honestly is kind of dangerous. Or in my opinion, what's way better is you need an order flow confirmation that the side that you believe has momentum has demonstrated that they are in control of price action, and that you have a location where you can get into a trade and risk a limited amount and put your stop in a place that actually makes sense, that you know that if you get stopped out, you're probably wrong. And when you get paid, it's like multiples of that risk. And so in this case, I'll show you on the algo, but it was pretty clear on this pullback. I didn't know at the breakdown that it was gonna drop, but when they pulled back and they couldn't get back over this, and there was some order flow on this drop here that showed me that if this can't get retraced, we're probably going to the next level lower. So I targeted here and took that lower and then held runners for as long as I could, but ended up exiting here when we rejected off the voodoo range level. But all I really needed to make that make sense, because if you think about what the where is it, short position, so if you're getting short here with your stop like that, right, if as long as I can get this, that's 2 to 1. So if that works 50% of the time, I'm in real good shape over time, right? And then if there's sometimes where it comes to here and gives me 4 to 1, I don't have to be right very often at all for that to work, right? But the key here is being able to get this small risk. Because if I wouldn't have gotten this pullback, my risk has to go like, I don't even know where, like way back up here somewhere. And it doesn't work. Even if you got here, not with a 50% win rate, that's not going to pay out over time. You know, you're just going to pay fees if you do that over time. So there's more situations where it doesn't make sense to take the momentum trades than there are where it does make sense. And that's what's so hard about it. In my experience, that's what makes it so tricky. And when the best times to get them in is usually when the price action is actually speeding up a bit. So you have to also make decisions rather quickly, and you don't have much time to think like, oh, I can put my stop here, and where's my target? Oh, it's here, right? By the time you've figured all that out, it's dropping. So you really have to plan ahead. I was thinking about that trade back here. I was already thinking, if I can just get under this and retest and reject, that's the short. These are not going to cut it because I've got this support in the way, and I've retraced way too much, like I showed you. Like this is not an ideal. That's not a trend day. When it comes 61.8% back or more, that's not a trend day. So what we should expect here is consolidation. So the reversal trades will work, but like at the edges, right? But the only place that makes sense for the momentum trade is actually after the breakdown on the retest. So, or the breakdown after that, whatever. You need the retest. That's what I'm saying to make it make sense. So keep that in mind. And like I said, I'll go to the algo now, and I'll show you the short first. Well, no, I'm going to show you the reversal first, and we'll get to the short in a minute. But there's going to be a lot of situations where I can point out the key order flow signals that I'm getting, and there'll be situations that tell me like this. If I'm looking for a momentum trade, this is where that's going to set up. But on another screen, I need to be aware of what the bigger time frame looks like that, so I know my trade location. Because the last thing I want to do is the mistakes I've made in the past, which is have a bias that for instance, like quote unquote, know that the market's going to break down, but every time it starts to do it, you get in and it stops you out, and then you get in and it stops you out, and by the time it actually works, you've taken like 4 stops and you're down on the day, even if you make 4 to 1. So instead, it's trade location plus expectancy plus the order flow signals. You need to manage risk appropriately. And that's why, in my opinion, I think momentum trading is way harder than mean reversion trading. All you have to do with mean reversion trading is know your location for where you're looking for that reversal, wait for the order flow to signal that reversal is likely occurring, get into the trade with managed risk, take some profit quickly to pay for that risk, and hold the runner. And if you're right, you get to the target and you get paid. And like I said, with the trade and perform setups, those work 60% of the time, but they may only set up 3 times a day, and because you have to wait for that trade location, and that can be pretty frustrating if you see the market moving in one direction and you're like, I can't fight this and I have nothing to do. So let me show you some of the examples of the algo signals that I'm finding work really well. Now many of these are not necessarily, how can I say this? They're not refined, right? I could do a lot better at coding them, and I will, but what I usually do is I have an idea of like, I look back at and I say, whenever I see this tends to happen. So let's code it up and see if I can get a back test on it. And if it works, great, I'll try it out, usually with a Apex eval, and then if that works, maybe try it with the performance account. But to make it refined to the point where it only triggers at the times where I actually want to get in, and not just triggering to show me that there's this order flow signal that, if combined with other signals, might be a good entry. That is a lot more work. And I am not a computer programmer, unfortunately. That is not what I do. I know how to program with Sierra charts, but I don't have a lot of experience doing the more complex stuff. So we tend to hire out to do that with some of the trade and perform entries, which are a lot more refined than mine are. So so Simon's chart looks like this with a lot less signals. Actually, I have a few more signals that I added even to this one, right? It's a lot simpler, and the actual signals are a lot more useful. Whereas here, I've got colors and lines and stuff like that everywhere, because I'm kind of testing out, like, what does this raw data tell me, and is there a pattern here that I can exploit? Once I know the pattern, I can start replacing the raw data with the trade signal and make it easier to read. It just takes weeks and weeks of work to do that. And I'm finding with the momentum trades, it's actually significantly harder. So, like I said, I will show you, it's a work in progress, and realize that I have multiple screens. And so if I'm looking for a reversal with the trade and perform setup, I don't need anything more than this. I can just wait for it. I just need to get a triangle up over a purple bar at location. It's very simple. So like that right there, or that right there, or after that. So this one, if this was the location, you can get an apex trap, which means we get under it and then reclaim it. So here, triangle up, takes it out, reclaims it long. So you don't need that sophisticated of signals to catch those. You just need to know how to find the location and what order flow you're looking for. For the momentum trades, it's totally different. You need to first figure out, is there momentum? Which side is it going at? And where is the locations that I need to watch for to tell me that the momentum is slowing? And what are the locations that I want to look for that will tell me the momentum is building? So what I do and the nice thing is, since this is a signal that I'm building myself, I can share everything. I don't have permission or access to the trade and perform code, but I'm building the momentum trades myself. So I can share as much as I want. And I find it's useful to share things. I don't know. So I'm happy to share more than I can about the trade and perform entries. So the first thing we need to look at is down here. This is delta. So this is how many contracts are being done on the uptick, the green, or versus the downtick. So when it's neutral like this, a very small body, it basically means that in that Renko bar, that there was an even number of moves on the uptick, like so buying, market buying, versus moves on the downtick or market selling. And whereas if you have a really green, big, tall green bar, like that one, which is this, that means that the majority of this bar was produced by people buying as it ticked up. So the market went higher, people bought. The market went higher, people bought. Now note that bar has a really big wick, right? So it opens here, right? And then it obviously went down, but it couldn't go down enough to print a bear bar and closed at the high, because that's how Renko works. It either closes at the high or the low, depending on which one gets hit first. So in this case, what that means is that down here on the way down, this volume on the way down must have been pretty weak, and the aggressive, or it was a lot of people absorbing, right? So like it could have gone down very quickly, and then it goes up on a big volume, and then tries to pull back, but gets absorbed, so it can't go very far. And then someone else market buys 10 more, so it moves up another tick, and then they put the 10 another 10 on the order book. So even though they sold 10, it didn't move the market. If that happens, that absorption, you're not going to get a decrease in delta. You're going to have a big delta because most of the volume was done as the market ticked up. So here, the market did visit lower, but most of that volume was done on the uptick. That's very useful information. If we look at the exact opposite, that one is the lowest delta. So here, it's basically the inverse. The market definitely did move up here, but it was likely getting absorbed, and people were then selling on the bid to push it back down way harder than they were buying on the ask. And so what I've found, number one, is when you have a very strong delta, either a very negative or very positive. And this works, like I said, even actually better on ES, but it works on NQ as long as you're not too zoomed in. If you're zooming into like the 15 tick or the 8 tick, something really tiny, this won't work quite right. It works great on like the higher time frames, like 40 tick, and it works just fine on the 24 tick. So for me, I just primarily look at those two, and I'll show you what I'm looking for. So big delta down, right? I'm going to mark that zone that bar traded, okay? Because I know that since the market traded it up here, somebody bought there, right? But they didn't have any follow through, and they got crushed. So if the market can take this back, that is a potential sign of a shift in sentiment. It's not a buy signal, but something has changed, because before that occurs, the sellers are successfully holding back those buyers. They're absorbing buyers. But if they give up that level, anyone who sold down here is going to recognize, because everyone has this info, everyone's going to realize that level now needs to get retaken. Otherwise, it's going to go, you're going to get a reversal. The shorts are going to start covering, and the momentum traders are going to start buying the breakouts. So look what happens if you look to the right here. These align. See that? And that's a really strong sign for a potential reversal. Again, not a buy signal, but what it's basically saying, again, is price was dropping with a lot of momentum. They tried to buy, but the sellers worked really hard to push that down, which again is interesting info as it is. Like, why are they working so hard here? There must have been a lot of buyers, but there were more sellers than buyers here. They came back up, they retested and went lower. You can see here they actually had less delta at the low than here. The result is they come back up and retest this to make sure that those sellers are still interested. They try to reject it. They can't take the low. See that? They can't make a new low. And look at delta. It's getting more neutral. So the sellers who were very committed here to holding back the market are, even though the price is lower, they're less committed here. Again, not necessarily a buy signal, but do I want to be shorting breakdowns when that's occurring? No. So we come up, we get over this high with the VPOC of the bar. That's the yellow line. It's the price with the most volume within that Renko bar. That dash is that price, and it's above that bar. And just as that occurs, we get this surge in delta. Why would people be suddenly buying on the ask just as you overcame the point where everybody was selling on the bid? There's obviously, you never know, but one possibility is that somebody got committed here to selling, 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 and then they suddenly are losing money because they thought the market was going lower, and now it's gone over where they got involved, and a big order came in, or multiple big orders at a price higher than the market was able to achieve during that period. So they puke, and the result is this now becomes new support. And what you're going to see is it doesn't necessarily mean that price is just going to rocket, because the higher time frame has to do the exact same thing. So on the 40 tick, the big delta is here. See that? That's the big sell delta here. Okay, so that heavily committed seller, he's still making money. He's probably going to defend that level, because if he doesn't, people keep covering, and he could potentially get stopped out only to see the market roll over just because nobody defended the level that he cared about for some reason. So as the market approaches that, if you look on the right, you can see that delta was increasing, right? On the buy side here, we had a big delta coming up as we approached that level. But they get to his range and they reject, right? He's defending, and that makes sense. The seller wants to get under this guy, the one with the big volume, or delta, I mean. They want to get price and volume developed lower so that they can take this low and stay short. And to do that, what they usually do is put a lot of volume and delta in. So what you should see if it's bearish is delta increasing to the downside. So if I mark his delta here, we should see this go lower than that, and we should see volume, these are the cumulative volume waves, get bigger than this. See how this was actually divergent? You had big volume here and then weak volume at the low. We need a bigger volume push through that low to be bearish. Instead, what ends up happening is they return to this level where there was all that delta, and buyers show up. And so how's that guy up here feeling? He's like, oh shit, I should probably cover some, right? So we get a big buy flow come in here. That's the arrow. So suddenly the what's the word? Like relative flows flip to buy. And now we're likely to going to come up here and test his high. We come up there, we get to his high. Oh, here's the big delta. I missed that. So they came up towards the high, and he defends right there, trying to flip with big sell flows and a huge delta. So now my job basically as a trader on a smaller time frame is to see this as a tipping point. He is trying to defend, and it's taking him more effort to do it than he put in initially, and significantly more effort than he put in at the low. So what that means is now if I can take this and hold or defend the point where they had all the buy delta down here, if this gets defended and I break this, the momentum will actually reverse. So what you'll see in this case is they just lift, and you could get long on this side because they've defended this and they've broken this with volume. Happens right there. So by the time that occurs, you know it's not short. And all of a sudden, even if you didn't get long down here where the high odds trade showed up, you know now that first of all, you're probably not going to get a lot of opportunities for a big pullback to get long.
because shorts are trapped. So the chances that you get a nice, reliable reversal at the back of the channel is way lower. And so instead, I need to switch strategies. And once I've gotten over that defending delta on this time frame, it's here, this guy. So once I get a VPOC above that, you can see they put big flows in aggressively, which is the star, and then follow through, which is the triangle. That's your entry. Or on the pullback when it holds. And normally, the way that Simon teaches to trade the reversals is you want your entries at the back of the channel. Well, when there's momentum, that's not going to happen very often. So I have to be confident that this higher time frame will support the buyers enough that I can buy at the top of the channel and expect them to go higher. In other words, I'm buying high with the intention of selling higher. So as I break out here, the question then becomes, how do I know that it's time to get out? And so what I'd be watching for is, first of all, divergence. So are they not able to put in enough buy delta and enough buy volume to overtake whatever they did on the last wave up? So these Weiss waves here are what I'm talking about. So watch when we get a negative bar eventually. So you can just hold this. There's nothing to do here other than hold. But see how we never came back to the bottom of the channel once we broke over this defense? They tried to defend, we got over it, and they can't even make it to the middle of the channel. So the traded perform entries that we know, they're not going to set up. You'll just sit here holding, yeah, you know what, and just miss it all, right? Now, look at that. Low volume, right? Big delta. That means if the sellers take that and it becomes resistance on the way down, it's probably done. So as soon as I see this big delta show up here and we get a reversal bar like this and I've got much less volume, I can just get out or at least take some profits. But if they get under this, now it's wait for a long that gets to the bottom of the channel and stop momentum trading. So here we take it out with only purple bars, which is actually good sign for buyers. So if that continues to only be purple, I could take triangle up after it bounces off that, or star. There we go. So that is an acceptable entry for me, a retest, because what we've done is we've defended this. The purple bars are telling me that price is dropping, but it's primarily dropping because orders are getting pulled from the order book. It's not aggressive sellers coming in. It's just liquidity drying up. And when that occurs, what you expect is one of two things. Either a breakdown because buyers are giving up and sellers are going to come in and aggressively hammer it, or B, you get an immediate defense like this. So Simon would say, wait for the triangle, and that's usually smart. But technically, I could buy this and then make sure that I can take profits here and have good risk reward because there was that big seller here and my stop goes here. So if that distance is 1-to-1, I can take it and then hold runners. Otherwise, I just need to wait until we get to the back of the channel. Now, technically, for me, what I'm finding anyway, is when I get one of these purple boxes, which means that there's a big delta to the downside, it is best to wait for a long at the back of the channel or wait for this to get taken out by a non-pink bar. So this may fail, but it's a good example of a spot where you could try a pullback buy, but technically it's supposed to touch it. So there's the breakout. I'd be taking profits, but holding a runner, right? And then it just continues. So it didn't quite reach the channel, but we got purple bars getting under a big delta, no bear bars underneath there, and then an immediate reversal that was followed by a triangle up and a breakout. So technically, it's now bullish again, right here. And you could go right back to momentum trading because you've gotten over a big delta and you've defended a buy delta. And so you can just go right back to looking for divergence or reaching a level where there was resistance. So see these green lines? That's likely resistance. We get a purple, so big delta, so be cautious. We don't have divergence, but they hit that likely resistance level and reverse with aggression. Probably not a bad spot to take profits. Additionally, the blue in the background says that it's a divergent bar, meaning it closed at the high but had negative delta. If you don't get continuation from those, you almost always come back to the channel. So the further away you are from the channel, the more dangerous it is to be long when these fail. Now, when they continue, when you get one and you get a non-pink bar above it, it can keep going. But if you don't get a non-pink bar above it, it's probably coming back to the channel. I don't know if it does this time, but that's usually what happens. Yep, back to the channel. So now, again, I'm waiting for the big buy delta to get defended. You can see we didn't put in another one yet. So I'd have to get back to the one that I had before, which is here. So let's see if they get back there. Otherwise, it's bearish, and I'd be looking for the reversal. So let's see. And we already have those setups. Note this is new resistance. So most likely the buy program is done. Oh, big delta. It's not that big, though. This is still your resistance. I wouldn't take that trade. The risk reward's not very good. It still might work, but yeah, get stuck in the channel. So that's a sign that the momentum's gone. Note how big this sell wave was versus the previous ones. There's definitely been a change in character, right? And so now we could do the exact same thing in reverse. So where's the big delta? Well, there's a buyer here, right, who might try to defend. And my seller is actually above me, and that's supportive, this one up here. So this guy is my resistance, and if I think that it's bearish based on location, I could say we're coming back into resistance, where we are rejecting, but I have not beat the big delta yet. So for me, I can't sell here because we've got this guy that's probably going to try to defend. If he does try to defend and we get behind him, then I can sell with momentum. Otherwise, I'm just waiting for the trade and perform entry. So see how they defend it? Purple bar, bull bar, right at the pink. It's going to lift back to probably take this liquidity. Yep. And that's why you don't sell that, because this guy can defend successfully. We get a big delta here. So if they pull back and defend that, and I can get risk reward to here, I can take the trade. It doesn't look like they're going to do it. Oh, maybe they will. It's got to defend right here. Oh, yeah, that's it. So if you wanted to, you could technically, oh, wait, where's the biggest one? No, that is it. Yeah, you could do it. But you'd have to take profits here. Having this one here might cause problems, though. I kind of doubt it works. Oh, did you put in a new one? No delta. I think it's probably okay. But again, there's no momentum, right? So do we expect just magically that buyers add momentum? Not usually. Plus, if I looked at the chart, most likely we're at a trade location that's not a good spot to be a buyer, if I had to guess. We could check. 15/2/48 at 11 o'clock on Monday Eastern. 11. Let me just go back there first. Back. 11 Eastern. Is this trade? See, this is my target, right? And I said I'm at, what's the price? 15,226. So I'm here, right? Ish, let's say. And my target's here. Do I want to be buying with momentum here? Probably not. It made sense down here to do it, right? To target this. But the closer I get to that, the worse my risk reward is. So most likely, even if it does break out, it's just not going to go very far. Oh, and it just immediately rejects. Yeah, I was wondering about that. This one here is the latest purple bar. And even though it got beat, now it's bearish. Now they technically still need to beat this guy. And they do. See how they got the VPOC under it? Okay. So the trade and perform sell reversal happened here and here. Because we got two trade location overnight highs here. We got above that. We rejected off of a previous resistance. And then we got, it didn't quite apex trap, but we got we really wanted a pink bar here, but we got the purple triangle down and then a lower high and a purple triangle down. Technically, you need a pink here to make it high odds. So I'll say that technically it's not an entry, but for the momentum trade, again, what I need to do is, first of all, I need to beat the defending buyer, which is here. See that big delta? I got to get under him with VPOC on a non-purple bar. And I need to be below the delta that is going to the downside. So here, which we are. And I need to see this act as resistance, which I did. So what that tells me is the potential is there for sell momentum. What I don't know, of course, is will it happen or not? If I want to be conservative, I wait for this breakdown, and then I wait for a retest that rejects here so that I can put my stop here. Because right now, it really needs to go higher than that. Because it could come up here and then roll over. That is probably a pretty good one, where it came back up and rejected. Is that bigger delta? Eek, it's really low. So now this has to be defended. Otherwise, it's not going to continue. But it might. Yeah, see, they got a VPOC above the biggest delta, and I'm no longer bearish. Because now I'm above the big seller, so he's trapped. Right? So now it's going to get choppy because I'm between pink and purple. So it's going to get choppy. There we go. That's beautiful. Under pink. Pink acted as resistance. Bigger delta, defending. That's a sell. That's a momentum sell. This one too. Defending. Oh, wait. Did we put more? You know what? This one, yes. But it looks like it's going to fail because look, they put in, it starts to go, and they put in a big delta, which could work, right? So it's not necessarily a reason to exit immediately, but it's definitely, there's a chance that the momentum has ended. So you could. The one thing that makes me think it is a good spot to get out is look at cumulative volume there and cumulative volume there, right? Divergence is like the enemy of momentum. So if there's volume or delta divergence, in my opinion, it's better just to be safe than sorry. And if I get a reversal bar, I'm just done with it. And again, this is just the way that momentum trading works, where like here, it looks like you've got a big potential drop. But the moment you try and you get divergent low, big delta at the low, it's just not worth it anymore. You just got to cut it. Even if you're only down a little bit, don't even bother, in my opinion, holding for the 1 hour loss. just get out, because it could set up again. You've got a big delta. This could act as resistance. And if you get under this, you could get a breakdown. Now here's where it's tricky. The hard part about trading momentum, if you're also trading mean reversion, is recognizing these situations where the higher time frame actually looks bullish and we're at location on that higher time frame. And you have to ask yourself, where am I on the chart and what would my expectancy be if this goes back into trend day up, if that's what's going on? Because in that case, the mean reversion trade, the one with the high odds, could actually pay you better because you mean revert and then join the trend. But if you're trading right into resistance, then the mean reversion trade has very little expectancy. So you might as well just wait to see if the momentum comes back. So technically, I would not take this mean reversion trade because I've got this big seller above me. But it makes sense to take it. It's just, I'm not going to. So I would wait. We get another big delta here. See how it acts as resistance? That's why I don't buy it. And they tried to get out into this pink one, and they reverse, defending this one. That's bullish. So if they can get over this, momentum's back. Pink, defended. See how the momentum, the delta to the side with momentum is increasing as we approach the big deltas opposite momentum. That only happens when there's momentum in the market. So here we get VPOC above the high. So basically any pullback now is buyable. Right there. You could probably buy this. Right? But we do have resistance here. It might not work. Delta momentum is not 60%, right? It's probably more like 45. But if I can get here to this resistance and get my 1-to-1, right? Put my stop here and get 1-to-1. And then sometimes it goes to high day and I get 4-to-1. 40% is enough. I don't know if it works, but this is the kind of spot that I'm finding it's worth trying. So I'd take a profit, right? Maybe if I had 3, I'd take like 1 off and wait with the other ones. And actually, once you get over it and they retest it and close above, you could honestly add it back because it's usually going to take. And then you just you just get that extra 10 points because this is going to get hit a lot like that. Now that might be the high, right? Because we took the liquidity. Maybe we didn't. But it might be done. Look at Delta. We got plenty of volume. Delta is not cooperating. See that? So see how the moving averages on Delta are dropping? So if we come back into the channel, I'm just done with it. Because we're no longer building Delta like we were here. So we're probably going to pull back. Big seller. I got to beat that for momentum to continue. So if I get one more bar down, I'll just exit. Out. Right? And most likely, in that situation, I might make 10, 15 points and then give back 10 on a runner. It might be break even. Right? But the times when it works for 4x is worth it. Yeah. So is it just going to bounce all of a sudden? No. Not with a big delta that's getting defended like that. Now to be bearish, we have to beat this guy. So let me redraw. If it's bearish, this guy gets beat. And this guy holds. The biggest one. See that? He should be defended on pullbacks like this. Like that. If it wasn't for this, actually, is that a bigger delta? So this just got moved to here. See that? So that's a momentum trade. Now you can short. Because this guy is no longer the biggest delta. And we've now gotten under the biggest delta. So stop goes. Again, will it work? I have no idea. But the location's right. So that you really want it here. But if you want to wait for a non-purple bar, it would be here and it's still all right. And my target number 1 is back here. That's like 2 to 1 at least. I don't know if it's going to work. I'm watching for divergence. And you can see here we actually had volume divergence. Right? Less volume, even though we continued the trend. So it's probably a good idea just to bail there, honestly. And especially when you also didn't get very much delta. You don't have to like mark it out, but on that next pullback, if I see like the DOM like struggle, yeah, I'll just wait. You know, get out, take 4 points or whatever, or whatever that is, 10 points, and no, not even 4 points, or maybe even break even, and I'll just wait. Right? It technically does not stop out though, so you could end up missing out. Oh, it's going to break down. Oh, no, they saved it. At location, right, for a long. This actually looks like a long to me. Let me just see if I could do it. Nope, we're under the big delta. So the problem with the long here is your target is this. The setup is right, but the target's here. So risk reward, not great. See that? Get stuck. So if we're still under this, and we're still under the big sell delta, technically, I could sell with momentum if I get increasing volume as we break down. Or we don't break down. Bigger volume, or bigger delta, right? So, but not bigger than this. Still not going to buy it. Could it just go? Yeah. Okay, now we're increasing delta. This moves down. If this holds, you could technically buy it, but my trade location's awful. Oh, but the big delta is to the downside is down here. So it's gross. Not touching it. Yep. Bigger delta. Yeah, it just chops around in here. I don't think it's going anywhere, most likely. Well, it lives. Biggest delta. So we can start over. It's not going to catch everyone. Biggest delta. Is it over the biggest sell delta? Is here. My trade location's awful for a long. Yep. Over the biggest sell delta. See how delta increased as we broke over him? That's super bullish. So if it wasn't for the chart telling me that this is an awful place to get long, that would normally be a buy for me with the momentum set up. So here I'd probably skip it because my trade location is awful, but it probably works for 10 points. We get big sell delta. Technically I have to get over that to be confident that we're continuing. And it looks like we're going to do that. Yep. So technically this is a long if your trade location's good, and it does go. So if you just do it anyway, it's going to be fine. But in my experience, if I'm trading into a location 15 to 56, I'm in unfair pricing. There's no way I'm buying that. No way. I will wait for a pullback and see if it holds. So I would have missed that, but it did set up. It just didn't set up in the location I wanted. See how these divergent bars, the blue, get continuation, right? That means they can keep going. Uh-oh. Big delta outside of the channel. And then we got under it. It's going back to the channel. Where's the big buy delta? Way back here. So mean reversion trades will start to work. I don't have a pink bar like I want. We want to pull a lift and then pink bar triangle down. Pink bar. Nope. It's got to be right away. So we wait. They beat the big delta. They've got to reclaim that to be bearish. If this holds, it can keep going like that. It can keep going. Can. Oh, look at delta. I mean volume, divergence, right? Super divergent. Don't buy that. I'm not touching this. I'll just wait for it to set up short. Big delta relative to what we've been doing, so it turns pink. Big delta to the downside. That big delta up, big delta down at location is a good short. I usually wait for the triangle right there. That's a short for me. I will take that every time if it's at location. It won't always work. That one just barely fails, and that was probably going to fall. Yep, I knew it. And that's how it goes. So here's my big buyer. Here's my big seller. It apex traps and breaks down. Super bearish, right? I would have been totally fine selling that, but when it stops out and comes back, it's actually a better trade. I hate to say it, but it usually works even better when it does that. Big delta down, right? So now my stop can get moved because I know if I take that with a VPOC, it's over. And they're increasing in delta, which gives me more confidence that we're going to continue to drop. And now you've paid for the stop. Keeps going. Big delta up. Be cautious if they defend this. Nope. See how they got under it with a non-purple bar? You could literally sell again as long as it's not divergent, which it kind of looks divergent. Yeah. So see how they got less delta here compared to up here? It's divergent. So now I'm done because I got a buy bar with divergence, probably at location because I've got a potential support here. See that how they came down and tagged it, right? Now, the biggest delta to the upside, we're under it. So that can act as resistance. Just because we're defending this and it's divergent does not mean it's bullish. If this rejects, it can start all over again and we can get a short. See that? Big delta. We're below the pink, right? It's bearish. It's just a matter of where do I put my stop and do I have trade location to be able to get short here? And I don't know, but I'm guessing yes. Yeah. No divergence really. Volume might be divergent. Yuck. That's gross. Oh, divergent bar. Did not get extension. You got to exit. And then big delta. I missed that too. Wait, hold on. Let me just... I'm curious if this acts as resistance, because if it does, it's bearish. But this tells me it's... oh, it's got a big delta. It's reversing. So I missed that one too. Big buy delta. We need to get over big sell delta, and the reversal is possible, right? This is where everybody got short. This is where everyone's buying. Look at how dominant that is. We get over it. Now we need to hold it on the pullback. They got to hold here. Oh, they get a bigger delta. That's usually bearish. But I wouldn't trade it because I've got the buyer down here. There's the pullback that holds. Right? So now technically to be bullish, I got to get up here with a non-pink bar. Yeah, it rejects. I'm not surprised. That apex trap is probably good for 10 points because you can target this and it might go lower. Big seller on the way down. Now that's resistance. So pull back into there after we break down, you can get a sell. And now it's here. Biggest seller. So what I want for the short, the highest odds short, would be a pullback that holds or defends that. It might not happen, especially to the downside. And when you start seeing these wicks, chances are you don't want to pull back anymore. Okay, there's the pullback, big delta. It's probably going to get choppy. The big delta is the second one. I really want to get under that for momentum to continue. I've gotten back into the channel. That's usually a sign momentum slowing. But this is acting as resistance, so it could start over again. But I wouldn't touch it now. And to be a buyer, I need to either get a big delta down here. I'll see the divergence. I guess we didn't make it a lower low. Or I need to get up here. So Simon, my coach, sees the pink bar, or sorry, the purple bar get beat, and he's already thinking long. I'm not that aggressive I want this guy beat because I want my win rate to be higher. From his point of view, he's like, if it gets beat, it's going to run. But from my point of view, if I take a stop there, I'm going to be pissed and I'm going to miss the higher odds trade. So I just skip it because I know that this is going to happen a lot. Now, if we break this, we could get another sell. Otherwise, I still need to get over this or bury a big seller. They defend it. See how the seller got moved? So they put in big sell delta here. So now I just need to get a buyer above that. That's not pink. Like that. And as I beat him, delta increases. Super bullish. Any pullback, that's defended. I want a triangle up, and then I would get long. No triangle. They're not going to defend it. So I got to watch out for purple. They just let it go. Oh, triangle up. Nope, purple. So now I got to be careful. No longer a reversal opportunity. Because now we're under pink and under purple. So now it's bearish. And that's technically a breakdown. And that's definitely a breakdown. See how we, once again, in the reverse, we had big delta, get beat, and the result is more negative delta. So we've overcome that divergence, and now it's probably going to break down, is my expectation. Oh, interesting. Big delta at the low. If they beat that, it can reverse. So if you did short here, and you see this get beat, you got to flip. Because now, this is a great long. I don't know if that works, but I'd try it. Boom. That pays for any stops. They put in a pink here. You don't want to see that. Because that means they were trying to follow through, and they lost it. So now this needs to hold, since it's purple. And maybe we can get a bounce. Oh, good. Big delta. It's all good. This can be bought right here. Whew. And your day is done, right? And you can just hold runners now. Because again, as you build delta, you just have to keep defending. So it's okay to trade under it, but we shouldn't get non-purple bars under those. Purple bar, yeah. So if you didn't get long down here, right, at the reversal, and again, purple bar, bull flows, triangle up, that's a great reversal. You don't need to know anything about momentum to find that. But if you miss that, normally we'd say, wait until the back of the channel. But that's not going to happen here, if I had to guess, because we've gotten momentum into the market. So most likely the middle of the channel or the top of the channel will act like the back of the channel. So instead, I need to look at where the big sellers are and where the big buyers are and see if they defend it like this. So that's actually a long. Purple flows, triangle up with a plus sign, even though it's at the highs. The problem is sometimes that holds. But when it runs, that's the only chance you get. So you have to decide. Do you want to wait and have the 65% win rate, but possibly miss the huge run? Or do you want to take the 40% win rate and sometimes get a 5-to-1 trade? That's the question. It's just, how aggressive are you? Oh, it might actually fail. Nope, it's going to go. So stop in this case. Goes underneath the flows. This. Stop needs to be under that. Entry. Anywhere in here is a good entry. Right? And note, anytime they get these huge buys, the pullback either holds or tests and reclaims. Bigger, any pullback can be bought. If it holds, I should say. A defending pullback. If it's defended. Oh, it's not defended. It's done. So now it's it's over. So I would have taken 10 and lost on my runner most likely. I assume it's stopping out. And since I got under a pink, I'd be out at break even here. And it might go now. And I'd miss it. But that's okay. Nope. Breaks out. So in the opposite direction, if you want to look for a momentum short, that's your big buyer. You're underneath them. This was the big seller, as far as I can tell. Pretty sure that's bigger. So you need to reclaim him, which happens here. You need VBOC below him. If he acts as resistance, that's a short, because I'm under the big pink. Boom. Right? Big pink again. Trapped purple, pink, triangle up. Where are you going to go? Back to here. So this is the mean reversion trade. Doesn't quite make it. Oh, pink. If that gets beat, it's bearish again. Purple. Yeah, it's probably done unless the next one goes up. Yep. So bearish again. We'd need a pullback for me to get in. Because otherwise that happens. There. So see how they... under pink, purple, pullback, defend, triangle down's a short. Right there. It's at the wrong side of the channel. The location's not good. It's not going to work 70% of the time. But when it does, it can pay 30 points. Ta-da. So I get my 10, hold the runner until I see big delta. And now I'm up. Because I don't want to stay short when I have a big buyer that's not getting beat. It could reverse. But if they beat this guy here, it probably won't. Oh, it defends. You could technically get short again if you want. They break the low. Oh, they defend the pink. I'd be careful. Oh, big seller. Triangle down. Technically short. Yeah, they're going to mess around. And now they've beaten them. Right? Right here. So pullbacks. Wait, we got to reclaim this. So if we get above pink, momentum's to the upside. It's got to be a non-pink bar. Nope. So still bearish. Triangle down's a short. Right there. Because we're under pink. Right? Technically this can hold. I guess you should wait. Because you don't have a new purple. Yeah, because this holds a lot. Now, over purple. Over pink. Long. Gulp. It works. So, you'd get your 10 points. If this holds and defends, you can get long again. Right there. Triangle up. Yep. That's a long. Momentum. It's not always going to work. You break. You have to target this. Right? That's got to give you 1-to-1. Otherwise, it's not worth it. And then sometimes your runners pay. You got under pink. Get out. It's no more momentum. It's neutral or bearish. There's no big delta to the downside here. It's probably just going to chop. Oh, there's the big delta. If that gets defended, it's bearish. Right there. Under pink, under purple. Oh, wait. No non-purple bar under it. It's a purple bar. You have to wait. So if this gets beat and you get a new pink bar, it's bullish. Gets beat. I really want a pink bar here because otherwise, this is my resistance and the risk reward isn't good enough. Yeah, not surprised. Oh, that was shitty. So see how they came back into here? So if they break this, it's bearish again. Non-purple bar. Nope, they're holding it. So now you could target back up here again. It's just neutral. See that? And again, this is just the trade and perform entry. Purple, up, triangle up. Back to the top of the channel. It's just, you can do that all day. Purple. Are we under pink? No. Have to wait. Could it just rip down? Yeah. But technically, not bearish. That's actually, if we get triangle up, it's a long. Back up to the top. Oh, that one fails. Nope, not yet. And it's good. Back up to the top. Break this, and it's bearish. Right there. Bigger flows, right? Short. Ta-da. So is it 100%? No, not at all. But like, you get 4 of those, right? And you'll be fine. Like I said, the hard part is keeping an eye on the chart and making sure that you're not doing this right into support or right into resistance. Because with a 40% win rate, you need to be right as often as you can. Hold on real quick. All right. Let me take a quick break. I just got to answer this text to make sure everyone's all right. Run to the restroom. I'm going to show you one more cool trade with these little boxes, not the pink and purple ones, the little ones. And what those are showing is where volume is dropping, but delta's increasing. They have some really cool properties for scalping. And if I might have mentioned it before, but it'd be nice to have it all in one video. So give me a second. I'll be right back. All right. Okay, so again, purple boxes, big delta spike to the downside. It's going to depend on location, trapping them at the lows, getting above them, and then holding their range. If you get above the purple and the pink, is a sign of momentum. The pink is just the inverse. Big delta spike to the upside. When they're at the resistance and you get under them, like holding that as resistance
and being under purple suggests it's going to the downside. Whereas if you see the pink on the upswing, like we did here, where it's lifting into where purple, right? Purple, big spike down, break over it, and see a delta spike up. That holding is a sign of momentum going to the upside. Does it mean you're going to high a day? No. But it means it's going to be really hard to short. And it's also going to be really hard for the market to get to the back of the channel where we want those high odds entries. So if you're going to trade after you've gotten above purple and pink and they're acting as support on a retest, that's probably your only opportunity to get long inside the channel. Otherwise, just like the one I just showed, if you get under pink with VPOC on a bear bar that's not purple, it needs to have significant volume, and you get under a purple box, or you see the purple box come in as you break the pink one, that is probably the last spot that you'll be able to get in before it goes under the channel, and retests into the channel are going to act like what we're used to seeing at the top of the channel, because momentum's to the downside. So while the Keltner channel is where most of the volume is expected to go off when it's neutral. When there's momentum, it's hard to stay in the channel. When there's no momentum, it's hard to stay out of the channel. You do need increasing momentum to stay out of the channel. So you do get these natural pullbacks into the channel. And when the higher time frame, whether or not I've got the 40 and sometimes I look at the 67, I've got the 80, it doesn't really matter, honestly. But when your higher time frame is bearish, see how we've got lower highs, lower lows? Hopefully that's clear up here. That's also going to mean that your bear trades have a higher expectancy, whether or not you're trading mean reversion or momentum. And a really easy way that I found to filter out when to trade in which direction is on this higher time frame, regardless of what you're using. Don't fight that trend if the direction is very clear. So if I go back here, now sometimes this means you're going to miss trades, but let's say I was trading, let me go back to something we haven't done here, right? And I'm like, wow, the 40 tick looks really bearish, right? From like here on. It's hard to stay inside the channel. They're going to the bottom of the channel or below it. They can't get or stay in the top half of the channel. It doesn't mean all the shorts will work and the longs will fail. But generally, even if they're high odds, like purple bar, bull bar, triangle up at the bottom of the channel, the chances that this lifts to the opposite side of the channel are going to be lower. See that? The middle of the channel ends up acting as resistance because there's momentum in the market from the higher time frame. So that higher time frame can also be used to find the locations, like I showed before, where the big sellers and buyers are. So here, I'll put a vertical line here so you can see it. See the big delta? And see how big that range is in delta? You have a purple immediately followed by a pink. So we're just going to mark off those two bars together. Whatever side the market is of that space, that range, if it acts as support or resistance upon a retest, it's going to stay on that side. So here, they try to go higher. They find no buyers, and they fall right through it. It's probably bearish. You don't know for sure until it comes back up to it, and either the top or the bottom acts as resistance. Now I'm very confident that this high of the top of the channel on the 40 tick
it's probably not going to be reached unless I can trap a big seller. So I need to get a purple at the low and then lift it. Otherwise, it's going to be really tough to get it up here. Now here they do get it up here a little bit, and then they put the big delta in, right? So I didn't say it can't happen, it's just hard. If they can get above that, it'll come back up here and test it. There we go. Gets above it. It should act as support. And now the natural reaction is going to be to have it come up here, and it can't. Oh, there we go. Is it going to go up there now? There we go. Now when that acts as resistance again, starts all over. Look at that big delta. It was overlapping with this. So that's exactly what I was talking about before, where you got over it, you came back and tested it, buyers come in. The likelihood that you're going to get across the channel is high. But we could have kept going had it not been for this. But when we get up there, assuming they reject here, right there, the chances are we're coming back to the bottom of the channel now. Bottom of the channel. And now it can come back up here. And one of these is going to break. Right? Sorry about the crooked. I guess, this mic picks up everything. He must be right outside the window. I can't even hear him in the room, but the mic hears it. So we go through it. Now if it's resistance at the bottom, it'd be a good sell. Right there. Boom. Sell. The momentum is bearish. On the smaller time frame, you could use these locations as likely entry criteria. So that would be where you want to get short, or even better, that, right? Big flows, follow through at location. Back here. Where do we first break down? What does that look like? Right here. This is the first retest of the location. I want to technically get under a pink. The rules don't change. It's still the same thing. It's just making it easier to see by finding the location on a higher time frame. So right there, we beat pink, right? We rejected other location. There's a purple up here. So we're under purple, under pink, and under the location. Probably bearish, right? Hopefully that makes sense. So all that is probably the most important, because that has the potential to give you huge trades, huge swings. And to keep me, if I do that correctly, it can keep me from making stupid mistakes, such as trying to buy over and over again when we have a seller clearly pushing the market down. And see how here, that's that same location, right? I've got it hidden, but that's that same location. See that? Sorry, the blue is yesterday's point of control, which doesn't apply to Thursday, so I'm hiding it. So this is the big seller, right? But then we get a bigger seller here. And so if that rejects, it can continue. See that? Hopefully that makes sense. Does it mean you just short this? No. You actually need to see it fall away and get some aggression, preferably with increasing delta and whatever other order flow signals you use. But what I think is neat is in the past, I'd get frustrated because I can't get my setup at the back of the channel. But here, because I knew there was a big delta guy, a big seller there, even though they actually put a bigger seller down here, right? Meaning if this holds on a pullback, it could be long. In this case, it's not, because he was so close and we can't get a VPOC. See how the VPOCs can't get above him, right? And the higher time frame is bearish. So if it's trend up on a higher time frame, this lifts. And it can be very frustrating if you don't identify that and you're like, this always works. Why isn't it working? That's why. It's because getting to the back of this channel, the top, is really hard when the higher time frame has a big delta up there. He's this guy I pointed out before, this one, is defending that location, making the back of that channel and even the middle of the channel very difficult to reach. And note on this higher time frame, we have not gotten under any of the purple bars, or sorry, over. We have not gotten over any of the purple bars. There's no one trapped here on the higher time frame, and it's bearish. On the smaller time frame, he got briefly trapped. This one, right here, at the star. I'm trying to point to it. Sorry, right here. He got this one here. This guy got briefly trapped, and what I said is if it's bullish, what you'll see is a pullback and a hold, because now we're above pink and we're above purple. But this one fails to produce anything because we actually had another delta holding us back. And more importantly, on the higher time frame, this guy and this guy and this guy are all being defended. And even this guy up here they're just building. See, look, building delta as we drop. That's going to be really hard to beat unless we get miraculously over him, and then that becomes support. We do it here on this tiny time frame, but it's not able to go anywhere because the top of the channel is like impossible to reach when the higher time frame is so bearish. So it's hard to see if you get zoomed in to this small time frame. And that's one reason why if you go to like the 15 tick and you try to do this, you can get really confused and frustrated. Like, watch. So this is the 15 tick. Same idea. You have to recognize it's bearish. Oh, I don't have my signals. It's too far back. That's too bad. What you'll see, we can still do it this way. So this guy had big delta. See him? He gets trapped right here. On this time frame, he acts as support, and they lift. What we would expect is as long as the big buy delta holds, which is this guy, as long as he holds, you would expect us to reach resistance. We might not overcome it if the two time frames, or three time frames in this case, are not aligned, all going up. In this case, this one looks like sellers are trapped, but the higher time frame, buyers are trapped, and sellers have momentum. So here, you'll get to resistance. You'll get to the back of the channel. You might even get over the channel. See how they bounce off here? And it looks bullish? But they get stuck. Because the sells, the exact opposite of that, are going to be way easier. So look at from the other side. Big delta up. Sorry, big delta up is here. I need to get under that to be confident that it's bearish if I wasn't sure on the higher time frame with VPOC on a non-purple bar. And then I need to make sure that I'm also under the big seller, which in this case, the most recent one was this. But if you want to be sure, you'd wait for the biggest one, which is here. So here, we might get another bounce. See that? Because he's trapped on this time frame. But note, we would expect to get up here if it's bullish, but the buyer who is here with the big delta, as well as the buyer here who had big delta, and here who had big delta, we got a VPOC on a bear bar that had some volume underneath him. And the result is his range, that delta, those aggressive buyers become sellers. And so once you identify that is now resistance and the higher time frame is bearish, technically, even though you're not under this one, all I need, I should say, on this smaller time frame is to be going the same direction as the bigger time frames, so bearish. And I need bigger deltas to be in the direction that I want to be growing. So look, the biggest delta on this wave is this, right? Next wave down here, the Weiss wave down, bigger delta is lower than that, right? So to be bearish, since the higher time frame is bearish, I don't really care about this one. He might be trapped on this time frame, but on the higher time frame, the buyers are trapped. And the sellers are acting as resistance. And we got sell flows that are being supported with continuation, right? Triangles coming after arrows is typically, especially if they're down here at the bottom of the channel, if that doesn't get beat, it's bearish. But even if you didn't have that yet, even if you were back here and you see this bigger delta when it's bearish on the higher time frame, even though the biggest delta is trapped, which could act as support, it might slow you down. As long as I'm also underneath the buyer, which is here, I need to get a VPOC below his low on a bar that's not purple with decent volume, which occurs here. Now, as long as this is resistance, if I get a triangle down, chances are we're at least coming to test this. Most of the time, we're going to continue. So there's the triangle down after the retest and reject. Or that one. Chances are I'm coming here. Note, delta continues to get more negative. More negative. As we break down, there's no reason to exit. More negative. No reason to exit unless we trap him. Okay, big buyer. So now I got to be careful. Biggest delta. Managing the trade's harder than getting in. That's the biggest delta on this time frame. Do I have divergence? No. Big sell wave down, big delta down. I just have to defend this. It's okay if price goes above it, but no VPOCs above it. That's a pink VPOC above it. We're going to ignore that. That's a real VPOC above it. On this time frame, the likelihood that we're going to come back and retrace here have increased. On the higher time frame, it's still bearish. So in this case, since it's bearish on the higher time frame, the smarter move, if I got short up here and put my stop here, the smart move probably is just to move my stop. Take profit if you haven't, right? Back here when you see the big delta. And then trail your stop, right? Break even. You're trading momentum. You can trade it. You can trail your stop to around break even. You don't do that when you're trading mean reversion, but trading momentum, you can totally do that because it should not reach that. At this point, by the time it gets there, it's going to be the top of the channel. So if it does get there, it's neutral in this time frame, which shouldn't happen. So they lift and they get stuck at the middle of the channel. And now we're looking for divergence if they make a new low. See how the middle of the channel, you can't get a VPOC above it on a bull bar that's not pink? Bearish. We should see increasing delta as we go lower. Increasing delta. No reason to do anything. Don't even have to take profits. Bigger. Okay. Big delta. Right? Versus how we were before. We should probably take some off. Look at delta. Divergent. Lower low on price. Higher high. Higher low on delta. And volume. Divergence. I'm definitely taking profits. Right? Does it mean it's going to rip higher and take me out every time? No. But chances are in this time frame, it's going to test this. That's the resistance. So putting my stop here makes no sense. Either leave it here at break even or just get out and wait for it to set up again. Most of the time it's going to come up here and test this liquidity. Sometimes it won't. Bigger delta on a breakdown. It's purple, which I don't love, but technically you could actually short that because you're underneath the biggest delta that's long, underneath him with a non-purple bar, and you've got a new purple bar that's low, that's big, a new big delta at a lower low. That's what I'm trying to say. And then this guy, the biggest delta to your direction, is behind you, supporting you, and being used as resistance. So, in other words, there's sell momentum in the market. It's not neutral. It's no longer divergent. It's breaking down. Even though this is purple, in this case, it's usually okay to sell it. It'll usually melt down. See that? So, like I said, the way I'm doing it is I'm getting short up here. When it comes down here, I'm taking some profits or moving my stop to break even. When I get the divergent low here, taking some profits or exiting completely. And then if I get a re-entry right here, I get short, stop goes here, and I just start all over again. Is it divergent? Yes. See that right here? If you mark where the low is on delta, you're going up. And I've added the moving averages to make that a little clearer, more easy to read. That the moving averages are making higher lows, but price is making lower lows. It's usually a sign that we're going to go into a neutral environment on this time frame, which would bring us back to the top of the channel. That could be 20 points. I don't want to give up 20 points like that. That sucks. Will it stop me out? Not always, but often. Right? I don't want that. I don't want to get short here, not take profits, and then get stopped out and lose 10 points rather than making 30 or whatever, 20. Right? Doesn't mean that the trend is over. Nope. I just have to start all over again. Find the big buy delta, get under it. He's here. I got to get under that with a non-purple bar. Make sure I'm building volume and delta as I go down. And then what I want is a retest. And here I don't get it. It just drops to the low. Not surprised. And then if I was still short here, that's a problem. Right? That's not bearish. Shouldn't see that. Where delta's increasing and you get a big buy delta and he acts as support. Right? Now again, we're on a small time frame. So could he get taken? Totally. But the sell delta is here on this time frame. If we get over him, it's not going to drop right away. We're going to need to put more sell delta in or trap buy delta. And in this case, it just rips. So that, getting over the big seller, right? We know that it's time to stop momentum trading when we get that, unless we get a new one. Hold on. Okay, so like I said, the important thing to see the difference of is when you've got the big sell delta down here on this tiny time frame and you get over it, and then you look at the big time frame and you're like, well, where's the sell delta here? Well, it was decreasing into the low, right? So it might not be the biggest one we've ever seen, but it's bigger, the biggest one of the wave, right? It's at the low down here, and we got over it. So on the big time frame, the sellers are now trapped at the low. Well, where's the buyer? He's either here or I would say here. Technically, that could be resistance, and it might be neutral if they reject that. Do I want to hold short for, once he gets broken, is here, 72, 30 points? No, I'll just get out, right? And then when they beat him, well, now I'm looking for longs. I just want a retest that holds. And no big sell delta Or if I do get big sell delta, I got to get over them. Because otherwise we're doing the exact opposite and it'll just keep going lower. We get above them, right? Retest, we need a triangle up. Right there. With bigger delta to the upside. That's the long on the higher time frame. At that point, once I see that we're bullish on the higher time frame, I can mark where that delta is here. And as long as that holds, I can keep being bullish on the smaller time frame. It gets lost right away. It's not bullish. Right? So you could take the 3-bar combos. This one technically counts too because these are all in a row. And get the reversal. And I don't think there's anything wrong with that. But what I like is the fact that back here, by looking at the higher time frame and the deltas, I knew that back here, the shorts would be a lot easier. And only once they got trapped, which occurred here, which again, from the point of view of a 15 tick, you miss the low. And for some people, that's going to be frustrating. But for me, I'm like, the way I see this is I got paid the whole way down, more or less, and avoided trying to buy as it's dropping. And now I can avoid selling as it's ripping higher. So even if I don't get this trade, even if it never pulls back and I never get the entry, although it looks like I get it here because I got to look. Big delta. Oh, do they see on the 15 tick? I should mention this because this is interesting. This is somewhat unique to the smaller time frames. On the smaller time frame, if you put in a big delta and you take it out like that, like I said, usually that's bearish on the higher time frame. Technically, you need to hold on the retest. It's not a sell. And I think I've said it, but it's a good example of why. And oftentimes on the higher time frame, it just puts a purple bar under here and not a whole bar. And then it just rips, right? Or it rips, pulls back, and then runs. But on the smaller time frame, oftentimes what they do is they actually reclaim it. So that's where all the delta was, poorly positioned above the channel. Kind of not where you want it. The sellers take it and they come back to where the sell delta was, which was a diversion bar, and they can't get under it with a VPOC. The result, they cover with big delta. So yes, you lose it, but then you put a bigger delta in, which is even stronger. Particularly after testing the bottom of this big sell delta and finding buyers. It's like they went to the price where everybody sold and there's no sellers, just buyers. So it's not bearish. But because the buy delta was so high up on the channel on this tiny little time frame, the result is they lose it and then the buyers show up anyway. So it has the potential to reverse and go lower after that, right here. When it takes out this big delta, it could reverse. And you can't, and the key is you can't just sell it. You can't. Don't do it. You have to wait to see if it acts as resistance. And when you can't reclaim the sell delta that got taken right there. Non-pink bar, VPOC above its high. This was the seller. It was just a wick, but we'll count the whole bar because it's diversion. They trap it. They try to reclaim it. Buyers show up. it's bullish. That whole zone now, because it was technically a big range of delta, that is now support. See that? That is now support. Will it stay there forever? No. It'll stay there until there's new delta. And then that becomes support. Where's the new delta? It's here. Not surprisingly, the sellers take it. They can't hold it as resistance. They take it. They try to hold it as resistance. And they can't take it. They can't hold it. See how they keep attempting to hold that? And it just won't give up, right? They've got all the delta up there. But every time they pull back into where the sell delta was, buyers show up, buyers show up, buyers show up. See that? So it becomes choppy on this time frame. On the higher time frame, it'll just be one bar. Right? On the higher time frame, this whole thing will just be like a range of one bar. It's like there's no information there. Now, there's not a lot of momentum here, but it's technically not bearish yet. To be bearish, it needs to reject, or we need to get new buy volume in, or buy delta in, and new sell delta, like this. See that big delta? And get under that, and then see it act as resistance. Now it's bearish, because this sell delta basically got shifted up when they continued to hammer it, and we saw increasing delta. It's got to get increased from wave to wave. Now it's bearish. Confirmed. Right? Divergent. It's going to pull back. They can't get through it. Big buy delta gets beat. It's bearish. Big sell delta here gets beat. Right? So neutral, because the buy delta is above us, sell delta is below us. You can trade the range if you want, but one of these is going to break, or you'll get new delta. Now you just need to get under that, because it's bigger from wave to wave. See that? They hold it. Where are they going? Back up here. It acts as resistance. If this one acts as support, it's bullish. There we go. And then you get out of the channel, and you get more delta. And you just repeat the whole thing over again. Can they get under this? They try, but they can't get VPOC under it. It's bullish. See how they come down, they test it with purple bars and wicks, and even bear bars with the VPOC way up here, and they just can't get under it. Yeah, it's bullish, right? Is it gonna scream to high a day? I don't know. Depends on the higher time frame. But I wouldn't want to short until I get under that. Now, I don't want to be long. And so is it possible to trade it on this time frame? Yes. But you just have to constantly adjust. See here, seller, trapped, right? With a buyer, that's an entry. Sell got trapped, and you got big delta as that happened. Comes up here. It acts as support. Momentum, I would assume. Nope, that one does not. This is a bigger delta. Lose this. Nope, they support it. See how they can't get a VPOC under it? Sneaky. Seller. Trapped. Just has to reclaim that. Can't do it. Now it's under it. Right? Now it's probably bearish. But it needs to reject before we have a trade entry. Right there. Bearish. One of them will work. That's the important thing to understand. You don't have to be right over and over again. You just need to know where you're wrong. Okay. Got on a tangent. Hold on, let me clear my throat real quick. I think I'm getting a cold. Okay. We're going to talk about the other boxes. So the yellow and on a bear bar and a blue like this in a bull bar. Those are also related to delta. What it's telling me, rather than a delta spike, it's saying volume is decreasing over time, but delta is actually increasing. Generally, that is vulnerable to being trapped, particularly if they're positioned on the wrong side of the channel. For instance, here, it's a seller at the bottom of the channel. If it's neutral, they're in the wrong place, right? Now, here it's not neutral, and as a result, they defend before they break it. But generally, the yellow boxes that show up under the channel, we're going to watch for them to get trapped and potentially become support. Like that. See how it comes down and it becomes support here? Big delta, lift. So that's what the reversal looks like. You just want to make sure that the higher time frame is like aligned, like we talked about for an hour. So note what happens when there's momentum. Blue, top of the channel, poorly positioned. If it's bearish or neutral, you're going to get it retraced and often trapped. You can see this one got retraced, but not trapped. See how they couldn't get VPOC below the low? Watch. Blue dot. This VPOC was inside of its range. They could not get a bearish VPOC below it, which they should have been able to do if it's bearish. The result, lift. And then this one, poorly positioned. Top of the channel. Should be pretty easy to retrace. They can't even reach the low. If that continues to hold, it's bullish. They put another one up here. Way out of position. They can't retrace it. At the moment, it looks pretty damn bullish on this time frame. Now, it's not only the bar that follows it. It's technically the next pullback. So if they pull back here and trap them, the momentum is gone for the moment. Okay, they put one in position, the yellow, at the top, and then they trap the blue one. It's not bullish. If you had any question of whether or not it's bullish here, it's not. If this becomes resistance, the result is we come back here. Or it just goes back there by itself. Now, if this becomes resistance, well, he hasn't gotten retraced yet. Let's see if they retrace it. They do. Does he get trapped? Yes. See how we got VPOC on a bear bar underneath the poorly positioned blue box? Next stop on the route is this one. He acts as support. To be able to be bullish, we need to get a VPOC back above this guy. Otherwise, it's still bearish. Okay, we get another one. We'll just stretch this out. See what happens here. He does not get retraced. Sign of potential momentum. Looks like he's going to be retraced. And they can't get a VPOC back above this one. Looks pretty bearish. Oh, they couldn't get a VPOC below this one. They could try again. They reclaim them. See how there's a VPOC above it? You really can't be bearish because we defended this one. And after losing this one here, we've reclaimed them. So this is now support right here. This one got fully retraced, but not beat. He's potentially support too. Where do we go? Back to here, right? Find a seller, right where we expect him to be. We beat this guy with a VPOC. It's bearish. Now we're headed to this one. We get there. We beat him. Okay, so now this one is out of position, but they couldn't retrace him. See how he's got this little bit of unretraced range? Very bearish, usually. Another one out of position. Let's see if they can retrace him. He's vulnerable. If it's bearish, he won't get retraced. They try and fail to retrace. It's definitely bearish for the time being. Okay, they retrace him. Like I said, it's not always the very next bar. And they beat him. He's trapped. This is probably support. These are so close together, it's not going to be that interesting because they're just going to run into him. Okay, another one. Out of position. Double. Extension, no retracement. Not even an attempt. Right? It's damn bearish now. And then we've got a bullish one. He's not retraced. Where are we going? Probably back up here. They can't beat him. It's going to come back to this one. Oh, they try and they lift. This guy, they tried to retrace him. They reversed. That's pretty bullish. Right? So as long as this continues to get defended, bullish. But our target would be to take the one that we haven't trapped yet. Because this, in fact, these both are trapped. So they have to act as support. Like that. See how we can't get a VPOC under it? Oh. And they lost it. And so it's bearish. Because they reclaimed it. Do they reclaim this? They do. We come back to the double. They reject. Right now, so it's not that interesting when they're so close together. Where this becomes useful is when we start spreading them out. Let me find a situation where that happens. Here. Okay, so we have double here. And then one here. Right? They get fully retraced. We print another one. Out of position at the bottom. He gets fully retraced. At this point, it doesn't look very bearish. There's not a lot of bearish momentum. Well, there's another one here. Out of position. So that could be resistance as well. He acts as resistance. It's usually the top or the bottom. The high or the low. Okay, we come back to this one. That has to act as support. Otherwise it's bearish. Reclaimed. Right? Beat. Reclaimed. Bearish as long as that's resistance. Yep. Okay. Bull. Not fully retraced. It's at least going to chop. Most likely. Probably go to the top. See, they passed the middle. They got into the middle. So it's at least going to the back. New one. No, so these are inverse. That's a pivot, most likely. So we're going to have to get above that to be bullish. You can see that this guy is getting pressured because he didn't get retraced. They try to hold him, and they fail. It's bearish. Oh. They couldn't. Interesting. They couldn't support it. They print a new one, not retraced. That's this one reacting. He tries to hold a support. That one's out of position. Way at the highs. They reclaim. Actually, they never lost it. That's bullish. They retraced them, but kept going. See that? Now, will he act as support? This one was in position. Immediately retraced. Bullish. For the time being, it looks like it ran into this. So they're not as useful for determining direction, but you can use them for location, for scalping. And primarily, the times when they're useful are either when they get trapped at the low or the high. So let me see if I can find one. So a yellow one at the low, getting trapped, getting a VPAC over it, or a yellow or a blue one at the high, but it's got to get a VPOC over it, and then it's got to hold. So like, this is not the low, right? We got a VPOC over it, they couldn't hold. Later, it could continue to act as support or resistance, but we're not going to worry about. There's so many of them that I'm not going to go into how to decide which one might be useful or whatever. So see how they can't get under this with VPOC, even though it's at the top, right? So I guess I can talk about it. I said I wasn't going to, and then I started doing it. So normally, if you get a blue followed by a bear bar, most of the time, he's going to get trapped. Sometimes the VPOC on the bear bar is in the wick or about high on the bar, and the result is he does not get trapped. Or it's a purple bar, and then the very next bar is bullish. This tends to be a pretty good support. It can get a purple bar under it, right? But they have to defend it. And when this happens, it's usually bullish. See that? So then the other one is, now this is in the wrong side of the channel, but it would be this at the low, followed by a buy bar, right? Which is usually a reversal that then gets taken or doesn't, fails to get taken, like this, right? It's just the opposite of this. In this case, you're at the top of the channel, so they tried to take it. They got a VPOC under it, and then they reclaimed it. So it's not as useful because it's at the top of the channel. Let me see if I can find one in the right place. Okay, see bottom of the channel, but the last bar in the up wave, usually that's going to be bearish to get but only if you get a non-purple bar below it, which happens here. Sorry, here. VPOC below the low of the blue and a non-purple bar. Assuming this is resistance, it's going to be bearish. See how it tries to continue to act as resistance, right? Since we had a purple bar after it, and the very next, the reversal bar, had the VPOC high in the bar, if this bar would have gone up and then another bar gets a VPOC above this, that's actually a really good reversal. So here's another top of the bar. He gets trapped right here. Right here. We got VPOC below his low, and he's at the top of the wave, right? We need to now reclaim him if we're going to think it's bullish. We do it right there. VPOC above his high. Now if it's support, it's probably bullish. They don't always come test it. But it's bullish. Because the expectation is he's vulnerable and easy to trap. But we couldn't. So that's good enough reasons to at least not be bearish. And then if he acts as support, it's a really good reason to be bullish. If they're at the start of a wave like this, they are the reversal bar, and they're at location and in position at the right side of the channel. This will often go to the other side of the channel. Often. It's got to be the beginning of a wave and at location. So like this, if it's not bearish, it's going to go to the opposite side. If it doesn't, it's bearish. And so that is just as useful, in my opinion, than actually buying it, is when I see the very first bar, the reversal bar, has a blue, and we're at the bottom of the channel or under the channel. If I can't get that to push, it's bearish. So the triangle down here, or even better, the retest, is actually a really good trade location. So here's, if you know it's bearish, and the reversal bar has the box, you can get a nice, a nice drop. This one's out of position. It's at the wrong side of the channel, but it's at the beginning of the wave. So you do get a lift, right? If they're not in position, you'll see them reclaimed often. They're not as useful in that situation unless they are defended like this. If they're defended, you can't get under it. Very useful. Because usually you do get under it. Note here. Oh wait, that's not the beginning. It's better if it's the first bar. Let's see. Okay, so first bar on the way up, but not in position. Once you beat him, if it's resistance, it's probably going lower. Confirmation, the reversal bar is yellow box, and that's usually bearish. Okay, in position, first bar in the wave, reversal bar. Usually, if it's neutral or bullish, headed to the opposite side of the channel, and it'll not be beat. They beat it. Expect this to be resistance. It's not. It's not that bearish. It's neutral. See that? So you can't just sell it because it got beat. Let's see. Wrong side of the channel. Yet we can't beat it with the VPOC. Whoops, wrong one. Yeah, so all of these really. If they're at the bottom of the channel, they should be easy to trap. And we can't. Once you break down under them, probably bearish. You want to retest, technically. And then in position, reversal bar. If it's not bearish, you should go to the opposite side of the channel with that. Instead, they break down. Retest is bearish. Let's see. Try to look for some more trapped ones, because they can result in really big moves that way. Okay. Trapped. So here, I'll show you. Bottom of the wave. I need a non-pink bar. Not this one. Not pink. With a VPOC above it. Right there. Bullish. This should be support. Don't quite reach it. But don't sell. They try to defend it. They lose it. If that acts as resistance, it's probably bearish. Nope. Support. Bullish. Here, let me see if I can find one recently. This works on the higher time frame too. Okay. At the bottom, which you wouldn't know until the next bar, but you get one at the bottom of the channel. Very next bar reverses. If it's not super bearish, it's usually going to lift to the opposite side of the channel. Bottom of the wave, not quite in position, but when it gets beat, it's probably going to the opposite side of the channel. This one's the top. Gets beat, out of position, probably going to the opposite side of the channel. This one's at the bottom. Beginning of the wave, probably coming to the opposite side of the channel. Right? That's what it does when it's neutral. This one's not quite the end. It had another bull bar, but it couldn't get a VPOC above. They beat it, and they can't hold it. That's a sign it's bullish. And then that retest is the buy for me. This one, top of the wave, top of the channel. The very next bar, VPOC gets under its low. If it's neutral or bearish, it's going to the opposite side of the channel. When it doesn't, it's bullish, and I want them to hold this, and I can buy it like that. Neat, right? Once you know how to use them, they're pretty cool. Okay, so this one's not perfect because it's not at the top of the channel, but end of the rotation, I'd expect this to come to support. And then here's one where you can't get VPOC above it, and then they take it out, it's bearish. So I would short that. And then it goes lower. This one's actually at the top. Oh, wait, no, it's not. Here's one that's trapped. Trapped at the bottom, under the channel. Usually, it's going to lift and go all the way to the opposite side. If it doesn't, and you lose it, it's bearish. Right there. So I want a pullback. You don't always get it, but at least a wick into that low. Right there. That'd been tricky. That's what you want. The pullback. See that? That's what you want. Doesn't always happen. Here's one that got trapped. I didn't draw that right. We got it over the VPOC. Expectation goes to the opposite side of the channel. When it doesn't and it gets beat, it's bearish. Pullback, sell. Reversal bar. Defended, going to resistance. All day you can do this. Let's see. I might be missing some. I'm looking kind of fast. Here's one. Beginning of the wave. Should go to the opposite side of the channel if it's not super bearish. Gets beat. Retest short. Top of the wave. Right? Reversal bar. Probably going to the opposite side of the channel. So it's not always an immediate trade. But when it goes with the trend, it is often a good entry. Here's the trapped one. Trapped here with VPOC above it. It becomes support. Buy. Right? So I'm looking for them at the edges. Trapped. Here. My expectation. Bullish. It should act as support. It doesn't. If this acts as resistance, it's a sell. Does not act as resistance. Now it acts as support. Now it can go. That's as complicated as it gets, is the head and shoulders. But that's a good example where it's like, you can't just buy or sell because it gets broken. You should really wait for that retest. Here's one at the low. trades across past resistance to the channel. One at the low to the channel. One at the high, tries to get to the channel, can't break support, can't break resistance, break resistance. What's our expectation? It's probably bullish. If we get over it and it acts as support, it'd be bullish. We lose it, so that's head and shoulders. There you go. Beat it, reject it, reject, reject. It keeps working as an important level. What you don't know is which side is actually going to win that fight. So hopefully that's clear. Okay, this got kind of long. My apologies. Hopefully all that makes sense. Here's the contact info.